Former Fed Reserve Chairman Alan Greenspan making news today in an exclusive Bloomberg television interview, talking about the economy with our Washington executive editor Al Hunt just a short while ago. And among the issues, the U.S. unemployment rate and bank lending. Here's a bit from the interview.
We have a problem in unemployment in the following sense. I think that we are seeing the cresting of unemployed as a result of job loss. You can see it in the data for insured unemployment benefits, and indeed, as of now, we have got virtually every person who lost a job on unemployment insurance, although we have weekly data which we can track, and it is cresting. However, there's a significant other part of the unemployed, which are those individuals who have re-entered the labor force after going out, and it's they who have been unable to find jobs, which has added a full percentage point to the unemployment rate.
On the financial side, you have said that we would be out of the woods if the LIBOR OIS spread reached a quarter point. It's now below that. Does that mean we're home free, no more toxic debt problems?
Well, I think what it does mean is that the financial system, especially in the United States and elsewhere, has reduced the probability of default pretty much down. It's now down to about 10 basis points. It's 12, actually, as I recall, the last figure I noticed. And that tells us that the markets essentially believe that the potential of default is now pretty small. But we haven't yet gotten, and when I originally raised that issue of 25 or less being sort of the normal, we were up at 300, and but there's a subtle distinction here, and the distinction is you can be in a position where the probability of you defaulting is very low. It's not the same thing as saying you will feel very comfortable in making new loans. And so what I think we need, and I've raised this issue in a different context, we need more capital. In other words, we have enough capital now, especially because of the accelerated valuation in the marketplace. But we need more before financial institutions, intermediaries, are going to feel comfortable with their funding capabilities and therefore their willingness to lend normally. We are not quite there yet, but we are obviously improving quite considerably.
No, we're not. Banks are not lending the way that people hope. Do you think that, with that scenario you just outlined, do you think that will change over the next 6 to 8 months?
Oh, yeah, I do. Because remember, part of the reason why lending is not there is we have this huge liquidation of inventories. And commercial and industrial loans, which have been coming down quite significantly, essentially are down in large part because of the lower level of short-term funding that is implied in bringing down the level of inventories. And I might add, there are other short-term needs which are also down. You see it in the consumer sector and the like. So it's a basic demand rather than a fear of lending. And previously, it was a fear of lending which constrained credit.
Former Chairman of the Federal Reserve Alan Greenspan speaking to Bloomberg's Al Hunt in our exclusive interview. Stay tuned to Bloomberg Television for much more from the maestro, Alan Greenspan, throughout the afternoon.